In this video, I'm going to share with you a pretty professional tool, an indicator on TradingView that will help you achieve some solid positive stats in trading. We'll break down this indicator, how to add it, how to set it up, and most importantly, how to trade with it. And by the way, our booster bot works with this indicator. Yes, that's the very same bot that achieves about 80% profitable trades. By the way, I'll leave a link to this bot in the description, but for now, let's move on to the indicator itself. For example, on the pound sterling to US dollar pair, I can see the indicator is now in the most active volume zone. Accordingly, from here we can go for a downward move. Let's select this currency pair. The pair is called pound sterling to US dollar. We select this currency pair and open a 1-minute sell trade. Why am I doing this? Let me show you how this indicator works. We have the main volume here. This means that in this price range, for example, from here to here, there is increased demand. This means that both sellers and buyers are actively trading here right now, competing with each other. The way this volume works is, when the price enters it, it's like falling into a black hole. It gets sucked in for a moment, but then it spits the price back out with a lot of force. That's exactly why I just entered a sell trade, expecting a bounce from this level, and below it, there are no significant volumes. As you can see, it's actually a pretty good solid move. I wouldn't say it's perfect, but it's a clean 12 points. And it brings me a decent profit. I'm making $2,100 on this trade. As you can see, this indicator is quite complex. You need to practice with it. You need to work with it. But after you practice and work with it, you'll be able to earn confidently. Let's add this indicator to the chart. To do this, we go to the Indicators tab right here and then type in Volume Profile. And we add the indicator from this author. Here it is, Volume Profile Fixed Range. And accordingly, we add it from this author. Next, we need to configure it. First, set the number of candles to 50, set the second value to 75, and the third to 80. Our indicator is now fully set up. If you have any other settings, just copy mine from this video. Now our indicator is configured, and we can continue working with it. Let's now dive deeper into how it works, and how we can use it to open trades. And if you want to get even more strategies and more indicators, then be sure to subscribe to our Telegram channel. I'll leave the link in the description. So what will you find in our Telegram channel? First of all, there's daily statistics. We share which currency pairs are currently the best on the market, where you can make a good profit. We also share financial news, which we can analyze and use to earn money as well. Plus, there are lots of indicators, ready-made strategies, and psychology tips to help you avoid losing your deposit. I'll leave the link in the description. Be sure to subscribe to our community on Telegram. Now, let's move on to the indicator. What does this volume represent for us? As I mentioned, we have high demand and low demand. For example, here we had some volume. Accordingly, we can see that on this line, right here on this horizontal line, there was very high demand. Now, let's look at the second situation below. Here, we had huge demand, a massive horizontal volume, and as a result, the price stalled here. In other words, when there are large volumes, the price will, for example, move actively, enter this volume area, and start to stall here, sometimes above, sometimes below, and then it breaks out, reaches the next volume area, and starts stalling again. This means that there is very high demand at these levels. When there is no demand, we see these kinds of impulsive moves, like here. In other words, nothing is stopping the price, there's no volume in front of it, so you can trade freely. With these levels, for example, if we see a situation where the price is just approaching this level, we can enter a trade in the direction of that volume. So, if the price is coming up from below, and we see that there is a very large horizontal volume, then accordingly, we can open trades in the direction of that volume. Accordingly, when the price touches the very top of this horizontal volume, we can enter a trade for a bounce. This is just an example. Sometimes the price stays here for a long time, and sometimes it breaks out and touches another volume level. It might hang around there for a bit too, and then head back to our main volume. And it can get confusing. If you don't fully understand how to use this indicator, just message our support account. Our managers or traders will help you out and explain how to work with this indicator. Now, let's look at another example. Here's a good example: British pound, Japanese yen. What can we see here? Let's mark the largest volume. Here we have one volume level that we broke through. Next, let's look for the nearest large volume. It's located much lower. So, from this point on the British pound / Japanese yen, we can open our trade upward toward our large volume, just like I mentioned. In other words, at this moment, the price moves beyond this volume. breaks through it, and then heads toward the nearest one. Since we've just broken through this largest volume, naturally, we'll be aiming for it, and only after that will we go down. So if the price has broken through this large volume, then we can confidently open a trade toward this very horizontal volume. Here we have a pretty good reaction, so let's see how this trade closes now. An excellent reaction, and this trade is bringing me a good profit. As you can see, we're really going to exit at this volume level where our volume is located, and that's exactly where the price is going to get stuck now. Let's take a look at another example. And by the way, let's look at another example, a bounce off our large volume. Here we see a fairly large volume. Accordingly, we draw a horizontal line for ourselves, but it's already here, even though at the moment the price is bouncing off, and now I could open a trade in the opposite direction. I wanted to open a buy position, but let's choose the US dollar/Canadian dollar now and open a sell trade. It's all because the price just bounced off and the volume will pull it back. Why does this even happen? Look, when there's no demand, let's say there are no buyers or sellers in the market right now. So there's no competition and we don't have a normal market. And then, for example, a big seller comes in and sells their shares, unloading their position. The market just drops without any resistance. When there are a lot of buyers and sellers, there's a really active struggle. But when there's no competition, nothing stops the price from moving lower or higher. Basically, whoever comes in with the biggest volume right now is the king of the market. Next, after I close this trade, I'll show you how to set up the chart and what time frames I recommend to use when working with all these levels and volumes. As you can see, another pretty good profitable trade is closing nicely. Today, I made money with just 3 trades. I think that's a solid result. And as you can see, this indicator really works if you know how to use it properly. Just remember, there are actually a lot of subtle nuances in how you can work. You can use this indicator even when there are no volumes at all. For example, like here, by the way, as I mentioned, look, where we have the highest volumes, that's where active trading is happening. That's where the market is really fighting. Where there are no volumes, we just drop straight down. As soon as volumes appear, we start lingering in that price range again. That's how the market works. You just need to know this. And this indicator actually helps you read the market. When there's demand, we move from the seller, for example, to the buyer, and accordingly, we use this kind of line here. If there are neither sellers nor buyers, and we see this kind of movement happening, then we jump into this move with either the seller or the buyer and, as a result, take over the whole market. But you could actually make an entire separate video on how to work specifically when there are no volumes. That's pretty interesting too, regarding the time for a trade. We work with 1-minute trades, and we set the candle time to 15 seconds. That's exactly how it works in combination with a 1-minute time frame on TradingView and with the settings I showed you. If you want to get different settings for another time interval, then just message our managers. I'll leave the link in the description. But here's what you need to remember. If the price is near the main volume level, then we enter in the direction of that volume. If it has already reached the volume, then we enter on the rebound. There are sometimes sharp impulses, sudden breakouts, but that's exactly when we can make a good return to our range. So basically, we trade around this largest volume simply because there's a lot of supply and demand there, and that's how we make money. Let me know in the comments what you think of this video and this indicator. I'd be interested to read your thoughts. And also to our entire team. I'll leave all the links in the description to our support account and also to our trading bot if you want to work on your own. That's all I have for today. See you soon.